Hi everyone, welcome to our A2X and Profit Genie webinar. Today we're going to be speaking about the Profit First method for UK sellers. Thank you for joining us. I'm really excited that we have Duncan here today. My name is Elspeth and I'm the UK Go-to-Market Manager at A2X. And Duncan Lloyd is from Profit Genie Group. Duncan, tell us a little bit about yourself and about Profit Genie.
Well, thank you for having me today, Elspeth. Today, Profit Genie is a firm of chartered accountants. We specialise in the Profit First method, which I'll come on to a little bit in a moment. But our job is to help our customers, our e-commerce clients, our typically Amazon and Shopify customers, to make more money and make them translate that as from profits on the P&L to cash in the bank.
Love it. Okay, great. So you're going to dive in. You're going to tell us a bit more about that shortly.
Yeah.
Very quickly, before we move on to the main agenda, just a quick word about A2X and who we are in case you're not familiar with us so far. A2X is a tool that automates the reconciliation of sales, fees and taxes, VAT, GST, from all the main e-commerce platforms like Amazon, Shopify, eBay and Etsy. And we push all that information through to QuickBooks and Xero, but also Sage in the UK and NetSuite if you're on NetSuite. Our main goal is to simplify all your financial reporting by organising all of that data into accurate summaries that match back to the amount that hit the bank. So moving on to our agenda for today. We're going to speak first. Duncan's going to talk to us about an introduction to the Profit First method, and then he's going to talk to us about how to implement the Profit First method specifically for e-commerce businesses. Before I hand over and Duncan shares his presentation, I did want to ask a couple of questions first. I've been reading through the Profit First book the last few weeks, and I've really just picked up that it's really centralized around the stories of businesses and sellers of different types of services and products who have used the method to kind of revitalize their businesses, make them less stressful and make more profit. That's what I've picked up on reading it. And so I thought it would be really interesting to just hear from you, Duncan, about how you came to Profit First and what it's meant for you personally as a business owner.
Great question. Well, we started a business a few years ago, 7 or 8 years ago, and built up a good number of customers. And then a customer once recommended the book to me, Profit First. And I'm a sucker for a good business book. Yeah. But this one was like a world tilting moment in my world. I realized that actually I hadn't been serving my customers as well as I should do. So we kind of remodeled everything we did thereafter, so that we serve our community much more effectively by focusing on cash rather than detailed financial statements, which you still need, but cash is what entrepreneurs understand. It's the lifeblood of a business. And so we pivoted what we do to really focus on that because it gives our customers real-time, meaningful information on how to run their companies.
Brilliant. And then one more quick question just before we dive into your presentation. How do you think Shopify and Amazon sellers could benefit from the Profit First method?
I think what it does really effectively is it hardwires profitability into a company. So rather than profitability being something you get to the year end and keep your fingers crossed and wait and see what your accountant tells you you've made, and therefore what your tax bill is going to be, right? Heart and mouth moment, yeah. Yeah. Actually, we're making it much more predictable, and we're making it such that when you get to the year end, not only have you made a profit, but you've got the cash to distribute. Right? Because how many times do you have a good year with your accounts are getting better and better and you're thinking, where's my money?
Yeah, exactly. And putting away that tax ahead of time so that you're ready when that bill comes.
100%.
Really important.
100%.
Yeah. Okay, brilliant. Right. I'm going to stop sharing my screen now and you're going to take over with your presentation.
Thank you for having me, everybody. So we have a good number of e-commerce clients, but they are generally Amazon and Shopify sellers. So we just use the term e-commerce as a summary. And what we tried to do was to look over a good number of those clients, around about 125. So I don't pretend this is over a massive population, But what we've done is look at the data for a 6-month period to July 24 versus July 23 to try and understand what's going on in the industry, what the challenges are, and how we can help serve our customers once we understand better the challenges that they face. And what we found is that certainly in this time period, it's been quite hard. Trading has been difficult. So if that's you and you're finding life difficult at the moment, you are not alone. There's definitely a feeling of a cash crunch. So even if revenue is up, and I think e-commerce sellers in particular get very focused on revenue, and I get that it's important, but really you're in business to make a profit, and we're much more focused on profit. And so when things are difficult, actually we just have to be a bit more on our toes to make sure we're ahead of the curve and we're predicting the problems that are coming down the line, so you can take actions that are going to make your business more robust and more successful. So over that population, the good news is that revenue was up by 13% in that 6-month period. However, inflation was quite high over the same period. So that 13% is a little bit flattering. And that's really where the good news ends, because cost of sales, particularly with Amazon are getting more expensive. But cost of goods, buying your inventory, shipping, everything is getting more expensive. And ad spend was roughly the same. Now, we actually treat ad spend as a cost of sales. I know everyone does. It's a bit controversial. I don't want to get into that today, but ad spend was pretty static year in year, comparing those two 6-month periods. So in summary, we can see revenues going up quite nicely, but costs are really going up. So gross profit is down. So that's the cost of delivering your goods to your customer. But also net profit is down quite considerably, which means that overheads are going up. So that's insurance and accountancy costs and rates bills and all the things that you're going to incur whether you sell 1 unit or 1,000 units. So it's quite a difficult environment at the moment. Now, quite often we'll have a new customer come to us, and these are the red flags for us where there are likely to be a problem. So hopefully this isn't you, but if it is, I urge you to take action after today. So if you don't have updated books, at least monthly, by books I mean accounts, I mean profit and loss, a balance sheet, KPIs, understanding your product by product profitability. If you're not checking those books, whether that's with your business partner or with your accountant or bookkeeper or mastermind group or whatever it is, you need to understand those numbers and what they're telling you. Or if you're only watching top line revenue or ad spend. These for us are areas of concern, are typical flags for where we expect businesses to be suffering. So uncertainty is definitely the name of the game at the moment, as ever it was for entrepreneurs. But I think particularly at the moment, we are in a period of quite a lot of flux. And doing nothing is not a great idea. I mean, even if your business is doing well, there's nothing to be lost by lifting the bonnet, looking at your numbers, checking your metrics. There's only risk in doing nothing and resting on your laurels. Which brings me on to Profit First. So it comes from the book of the same name. Now, I wish I wrote the book, but unfortunately I didn't. It was written by Mike Michalowicz. And it's a really simple idea. And the idea is that you put money into dedicated bank accounts for specific purposes. One of those accounts being a profit account. And in fact, that's the first account that Mike suggested you put money into, hence the name Profit First. And the reason for that is because your company's job is to make a profit. If it's not making a profit, then the future doesn't look great. And we often get quite a bit of grief on social media. Well, all you care about is profit. That's to misunderstand why we're here. The reason you have to be profitable is because if you're profitable, you can invest, you can pay your staff more, you pay more tax. It's an entirely virtuous cycle. Making a profit is honorable and virtuous. And your duty as a business owner, as a director, to make sure your business is profitable. So, why and how? The how is probably a bit easier. All we're talking about is opening a number of bank accounts, a profit account, an income account, operating expenses, which I'll call OPEX for brevity from now on, tax and owner's pay. These are what Mike calls the foundational accounts. Now, in that slide, you can see there's a derivative book called Profit First for E-commerce Sellers. If anyone would like to email me after this session, I will send you a copy of that book. That's a gift from me to you. I hope you enjoy it. Now, the reason it works is down to something called Parkinson's law. Now, Parkinson's law is nothing to do with Parkinson's disease, by the way. That's entirely separate. Parkinson's law is the theory that the more a resource is made available, the more it will be used. And we can see this most easily with time. If you give a member of your team a week to do a job, they will probably take a week. If they give them a day, they'll turn it around in a day. And the same is true with money. If money is available, it gets used. And so if your business has one bank account, or maybe it has two, maybe you have a tax account as well as a main account, then actually your bank account is giving you a misleading signal as to how your business is performing. Whereas if you have the 5 accounts that I mentioned, the profit account, owner's pay, tax, operating expenses, and income, you deliberately engineer stress into your business in a good way, because you put money aside to pay you. You put money aside to pay the tax man, and money is not yours. You put money aside for profit because that's the purpose of your business. And what's left is what you have to run your company on. And that means that the money in that account is giving you a meaningful signal as to how your business is performing. And there will come a day when there's not enough money in that account, and that is going to be a stressful day. But the point is, you're aware of it. You're not waiting for the year-end accounts. You're not waiting for the management accounts. You know there and then, in black and white, there is a problem, and therefore you can do something about it. Now, in accounts, we're taught that sales less expenses equals profit. And who would argue with that? I mean, it's just maths, right? However, there's a problem with that. And the problem with that is that profit is what's left over. It's the last thing. It's the last thing that gets thought about. So it doesn't get prioritized. And if it's what's left over, I mean, who wants to live on leftovers? I know I don't. And so the formula has been rearranged to sales minus profit equals expenses. This is the basic principle behind Profit First. We're putting profit first so that if we prioritize it, we're far more likely to achieve it and make it happen and be aware when we're not on target to achieve what we want to achieve. So, bank balance accounting. Let's get started. By the way, I'm a qualified chartered accountant, and I was taught that bank balance accounting is not a great idea. That like trying to run your company on the bank account is like driving a car looking at the fuel tank. And I absolutely believe that. You know, back in the day, when I first qualified, and indeed when I set up this company. But when I read Mike's book, it was a really humbling moment when I realized actually I'd got that totally wrong, because entrepreneurs understand cash. You know, often when I go to events and I'll say them in front of 100 people, and I'll say, put your hand up if you've checked your bank account in the past month. All the hands go up. And then keep your hand up if you checked your bank account in the past week. At least half the hands are up. And keep your hand up if you checked in the last 24 hours. A quarter of the room keep their hand up. It's natural behavior. It's what we do as entrepreneurs. I run 2 companies. That's what I do. And if I do it as a chartered accountant, I'm quite sure most entrepreneurs do it as well. So what we're trying to do is capture that natural entrepreneurial instinct to wrap your arms around the bank account to understand your business. But we have to do it in the right way to make it meaningful. So I mentioned earlier about the 5 foundational accounts. And if I think there is a challenge in getting the system up and running, it's where people get the idea and they love the idea, but they try and implement it too quickly. And so it's far better to do a quick start in a light touch way. So what we want to do is combine the income account and the operating expenses account. So let's say you've got one account at the moment. You would call that your OPEX account. You then open an inventory account and a profit account. Now, the inventory is there just to put goods back on the shelf, because you need that for your next round of sales. So that money has to be put to one side. And the profit account, that's the raison d'etre of your business. That is why you are a business. And the reason we put 1% there is because, again, we just want to make baby steps. There's no point in rushing this and having the system fall over. So your business can survive on 99% of its money, right? Therefore, you can put 1% away from now on and do it for 3 months. And in 3 months' time, from month 4, make it 2% and do that for 3 months. And then from month 7, make it 3% and so on. So if you were to do that over a 2-year period, you'd go from 1% in the profit account to 8% in the profit account. And that is a transformation in any business. The next principle of Profit First is the rhythm of the transfers. Now, this is really key, because what we're trying to do here is develop a profitability habit. We don't want profits to be something unpredictable that happens at the year end. And it can't be a system that's too complicated and that runs against the grain of human behavior. So if you're like me, I'm very much a creature of habit. Knowing what I'm doing and when I'm doing it ensures that it happens. And so in Mike's book, he talks about transferring money on the 10th and the 25th of the month. If you get your Amazon payout on a particular day of the month, you might want to time your payout around that date. But it's important that date's in the diary, so that on that distribution date, the money goes into the accounts and the system gets traction and it happens. And then quarterly, this is the real magic of the system. What we want to do is make sure that you, as the business owner, get a quarterly bonus. So at the end of the quarter, we recommend that our customers take out half the money in the profit account. Now, the profit account is there to reward the owners for taking a risk and running a business. In fact, we want our customers to get paid 3 times. We want them to get paid a salary, like everyone else. We want them to get a quarterly bonus as a reward for taking a risk and running a business. And then if they're doing those 2 things really well, what they're doing is generating a predictable cash-generating machine. And therefore, the business is worth more money to someone else. And that's when you get the 3rd payday, because you're building equity value in the business by demonstrating that you're running your company just like BP and Tesco run theirs, which is to pay all their costs and then pay their owners once a quarter. And of course, the profit account. Now, most business owners like to keep a good amount of money in their business. And so we quickly worked out that actually asking our customers to take money out of their business every quarter was a bit of a challenge. So we like to separate the profit account into 2, a profit account and a rainy day fund, or a vault account, as we like to call it. And let's say you're making 8% profit. You might put 2% in the profit account and 6% in the rainy day fund. And in doing so, you're still hardwiring that profitable habit, but you're actually earmarking cash within the business to give you wool in your back for when Amazon loses stock, or there's a challenge in your business, or maybe that money's there to help you take advantage of an opportunity to buy a competitor, to acquire premises. But whatever your business needs are, if in doubt, open an account. There's always a way of hacking the system slightly so it really works for your particular circumstances. And then we get on to companies with debt. And very often I'll talk to a business owner and they'll say, this isn't for me because my business is loss-making. Or I've got loads of debt, and actually that's my priority to pay that. Don't let the name Profit First mislead you. If your business is loss-making, you need this more than ever, okay? Because you want to be clear on when your business is going to make a profit. That is, after all, the purpose of running a company. And with the way that we implement Profit First, we will make sure that if a company isn't profitable, we are very clear when that is. Is it month 6, month 9, month 12? and then track our way towards that particular period. So we make sure we're on target to achieve that first magical profit distribution. And if you have debt, if you have loans, we'll set up an account for loan management, a debt destruction account, and then develop a strategy for paying off that debt before we start making distributions. Another challenge we have is the transition to Profit First. Typically, people want to do it at the start of a new financial year. The best time to do it is today. And if there's one thing I would love you all to do, it would be to open an account, call it a profit account, and start putting 1% in. That will be the start of a great habit that you can build on over time. And of course, profit distributions, I mentioned earlier about doing them quarterly, but in your own company, you can have your own policy. Maybe you do it annually, maybe you do it monthly. It's entirely up to you. It's the beauty of the system. It can be edited, hacked, amended to work whatever your business is. And credit cards. Credit cards are great. They give us loads of protection on purchases. And if you're like me, you like your air miles. So we don't want to miss out on that. But equally, they do tend to hide the money that your business is spending, and they can give you a nasty shock when that bill comes in. And so we want to make sure that there's money going into an account to pay the credit card. So in doing so, we both make sure that the money that you're still getting the benefit from the credit card protection and the air miles, but you're allocating cash to pay that credit card off early, if certainly on time, if not early. And in doing so, the line of credit on that credit card remains open to you. So if you ever really do need it, if you ever really do have a cash crunch, you've got that to lean on. Whereas many people get a credit card and then just absorb that credit line as part of their day-to-day business. And we don't need to do that. We want that to be something you can draw on as and when you need it. So you might be wondering, well, what are the percentages? We call them TAPs, target allocation percentages. Now, this chart comes directly from the book, which is why it's in dollars, but you can just read it for pounds. They translate perfectly. And you'll see from left to right, from A to F, we've got small companies up to 250,000 in revenue. On the left-hand side in column A, up to fairly large companies, 10 to 50 million in column F. And you can see that the TAPs change from left to right. So profit is 5% for a small company and 20% for a large one. Owner's pay is 50% for a small company. That, by the way, includes the owner's tax bill. And 0% for a large company. That's because the owner would be getting paid through OPEX in a large company. So these are there to give you a sense of the kind of benchmark that would be applicable to your particular business. And one of the things we like to do with new customers is what we call a profit assessment, where we'll benchmark your existing performance against these particular numbers. And that often doesn't make pretty reading when we take on a new customer, but these are intended to be top 10% companies. These are aspirational percentages. I spoke earlier about the quick start. If you wanted to take it to the next level, we suggest you have these additional accounts, owner's pay, and taxes. And I'd like to introduce the concept of real revenue, because I know, we e-commerce entrepreneurs, we love our revenue, right? But it can flatter the business and not give you a meaningful sense of how the business is performing. So real revenue is the revenue the business earns, and this is a profit first term rather than an accounting term. Is the revenue the business earns after it's paid for its cost of goods. So if your cost of goods is 50% and you do £1 million in sales, you're really a £500,000 business. So in this example, we're saying 100% of money comes in. Let's say 30% of that is to replace goods. We've now got 70% left. Well, we're going to call that remaining 70% our 100%. And then we're going to distribute that revised real revenue figure on the remaining percentages. So we'll put money aside to cover the cost of goods and then allocating the rest. It just gives us a much clearer view on the underlying performance of that business. All the concepts I've spoken about are very high level. We're talking about monthly cash movements. But obviously running a Shopify, an Amazon business, we need to get granular. We need to look at product by product, profitability. I'm not saying that Profit First replaces any of that. We still need that. You still need management accounts. You still need P&Ls, cash flow, balance sheets. You still need to look at your product by product performance. They're looking at different ends of the same problem. This is the kind of data we like to get into, where we're looking at the top 10%, the top 10 products, the bottom 10 products, look at a number of key metrics within our customers. We're not just looking at cash. We're running our fingers all the way through the company to understand all the key drivers, advertising spend, good number of metrics, depends on the company, but the point I'm trying to make is we can't just explore, can't just focus on cash at a high level. We have to go right down to a granular level of product by product. And a couple of benchmarks just to wrap up with that. If your business is doing gross profit, so that's after your cost of goods, that's after you're buying your inventory and your shipping, your advertising. If you're doing 30%, I would be quite concerned. It's really, that's really low. And if your net profit, so that's your profit before you pay any tax, and after all your other costs, if that's 5%, that's low as well. Really, that was to be at least 10%. And finally, all those aspects that I've spoken about, they are encapsulated in the way that we work with our customers. So we have three key pillars to that: mindset, cash, and data. So the mindset is about the accountability. It's about the behavioral aspect of running your company. The data is the KPIs, it's the management reports, and the cash is the Profit First system. And in the middle of that is you and your business getting your quarterly profit distributions. After all, that is the purpose of running your company. So if you would like to email, I'd love to hear from you, and I'll stick a copy of Profit First in the post to you. This system has really helped our customers, and it's worked I use the same system in my personal life. My daughters are in their 20s, they're at university, they use the same system in running their finances. I read the book and I went to see Mike. I flew to New York to see him to say, I want to run the license for Profit First in the UK. So I now help 40 other accountants and bookkeepers to implement the system. And the reason I tell you that is because I really believe in it. I've seen the difference that it makes. So if there's one thing I'd love you to do, is to open that account, call it your profit account, and put 1% in from now on, and email me so I can send you a gift. Thank you so much.
Thanks, Duncan. It's brilliant. So as Duncan said, if you'd like to chat more, look him up on LinkedIn or go to their website, Profit Genie Group, to chat more about Profit First. Take that first step of opening your profit account. I think that's a great action step for anybody wanting to get into this. And definitely the book is really worth a read. I've really enjoyed reading it the last few weeks. Following up on that, if you do want to talk to A2X, you can always do that at contact@a2xaccounting.com, or hop onto the website and speak to us in chat, or look me up in LinkedIn for a chat. And yeah, all that to say, I mean, this has been really helpful. And I know that Duncan is really going to be around in the UK this year. So if you want to chat to him, he'll be at some events, and speak to him about Profit First. And I'm excited to follow along with your progress, Duncan, and see how this develops on the UK side.
Thank you.
So thanks again for being here today. Really appreciate it, Duncan. And thank you all for joining us, and have a great afternoon.